What's going on, everybody? It's Blake here at Trade Tracer. Welcome to the market report. In this video, we are going to recap the S&P, the general market, and talk about how I am trading this next week. All right, so let's go ahead and get started here. As always, none of this is financial advice. Always trade and invest at your own risk. I have the S&P pulled up here on a daily time frame, and we can see right here we are closing within the cloud. So to me and my rules, this is a break of trend. So we had a 7-day uptrend, and now currently we are closing within the cloud, which is the 10 simple day moving average. So for me and my rules, this classifies as no trend, and in no trend, our number one priority becomes preservation of capital and year-to-date gains. So you don't have to be a rocket scientist. You don't have to know exactly what the market's going to do. All you need to do is preserve your gains, preserve your capital, and wait for the next uptrend. Now, the NASDAQ has been a laggard lately, and you guys know that I like to see the NASDAQ lead. Now, last week we talked about putting in these new highs without MACD, so these highs weren't confirmed with momentum. They didn't come with the MACD. And I mentioned that this isn't troubling until we break trend, and that's exactly what what happened to us on OPEX Friday. We closed within the cloud. We broke trend. Now, if we get any sort of follow through this week, if we start closing below Friday's low, I think it would be very, very concerning, especially if we wanted to come down and test this low that we put in on January 4th. I have this low that we put on January 4th because it is a pivotal level, and if we break this level, that would be fairly bearish. Moving forward, same thing. Preserve your capital, preserve your gains, wait for the uptrend. We make our money in the uptrends. When price gets back above the cloud, that's when I'm going to start adding long market exposure. Now, you guys know, obviously, I do provide trade setups that still have a high probability of working, a high probability of success, but we need to trade in the general trend, the general direction of the market. Right now, the market is telling us nothing. We are in no trend. Low probability trade setups persist in no trend. If we close below Friday's low, that would be a downtrend, and we would be looking for short setups. Personally, my personal risk profile and my trading time horizon and my risk tolerance, I don't like to short the market, especially when the higher time frames like the monthly and the weekly are still in very strong bull markets, bull trends, all right? So for me, I'm preserving capital. I'm waiting for price to get back above this cloud and ideally back above Friday's high. When that happens, I will start to press. I will get long. Right now, I am preserving capital. If we break Friday's low, we enter downtrend, and I'll be very, very cautious with my capital. Let's take a look at a couple other things. Bonds. So bonds are still trying to find some sort of bottom here. Still below the cloud. Don't love bonds, but if equities start to slip, we could see some money flow into bonds. Not a great setup. Don't really love it. Gold. Gold is breaking down tremendously. We are below the cloud and confirming price weakness below the candle that broke below the 10 and the 50-day moving average. So on Friday, we did confirm price weakness confirmation below this low, this 171.62 level. So keep a close eye on gold. I think this probably has some more downsides. So that's not a very good looking candle if you ask me. Some of the other sectors that are leading are biotechs. Biotechs look really strong. Do have a fresh MACD cross on the daily, and we are printing somewhat of a doji candle on Friday, not really telling us much, but of the sectors, the biotechs look fairly strong. Also, XLF, take a look at that. The banks are trying to break out. We're still holding above this cloud. We're still holding trend. However, we would expect to see some sort of resistance in these two bands because these are previous all-time highs. And if I just go ahead and zoom out here for you, you can see where these levels are on a weekly time frame. You can see the highs that we put in February of 2020, and then also the highs that we put in back in 2007. You can see we're bumping right up against those levels. Now on the higher time frames, on the monthly and the weekly time frames, the investing time frame, this still looks very bullish to me. I think we do potentially break out. But of course, we have to respect this daily time frame and first get above some of these key levels. Still holding trend, but I still think banks could use a little bit of a momentum push to get moving forward. And finally, The energy sector, XOP, oil and gas, I think this looks really good. I mentioned we breaking out of this anchored VWAP from the highs that we put in back in on, let's see, this is back in April of 2019. So you can see this has been solid resistance for quite some time. So resistance, resistance, resistance here, here. And then it looks to me like we've just broke out and we're trying to retest before making another run higher. So I do think banks and energy are two sectors that we need to keep a very close eye on, that we could see some rotation if tech starts to slip, which right now it currently is. So that's what I have for you guys this week. Remember, we are closing at no trend. Preserve your capital and year-to-date gains. You don't have to know what's going to happen next. You just have to get long when we break above the cloud and we are starting a new uptrend. When that happens, I will be aggressive. I will press. I will add long market exposure. Until then, I'm chilling. I'm letting the market reset. I'm doing a little reset myself. And until we see some prices that are more bearish, or excuse me, until we see some price patterns that are more bullish, I am preserving my capital. See you on Tuesday.